Bitcoin has just closed its highest monthly candle in its 15-year history, with the halving just about 16 days away. Bitcoin's supply flow is about to be cut in half. This could not have come at a more opportune time for Bitcoin holders. As we see, the current Bitcoin supply flow is not enough to meet demand. Spot Bitcoin ETFs bought 66,000 Bitcoin in March, while miners only produced 28,000. And it's not just Bitcoin ETFs, it's individuals like Michael Saylor, it's companies like MicroStrategy, it's other entities like Tether now holding over 5.1 billion worth of Bitcoin to back its stablecoin USDT. They're adding Bitcoin to their balance sheet. Smash the like button, guys. More people need to know about this because the fact is, taking a look at Bitcoin on exchanges, available supply of Bitcoin is running out. Look at this sharp drop as price rises. There's just not enough Bitcoin to go around. The next 9 months are going to be wild. Make sure you have a plan. Make sure you subscribe to our YouTube channel, turn the notifications on. We post one video every day, keeping you informed, giving you that edge. If you're interested in making money in crypto, subscribe to Altcoin Daily. Let's talk altcoins. I'm extremely bullish on altcoins, particularly where we are now in the cycle. Altcoins are going to be where you and I make the most money. Think about it like this. The biggest asset manager in the world, BlackRock, is using Ethereum, and the biggest crypto company in the US, Coinbase, is building a layer 2 on Ethereum. None of us are bullish enough on Ethereum and the altcoin market. I don't know if you realize this, but Ethereum is finally ready for the masses, with over 5 million weekly active wallets now on Ethereum L2s. Like, this is really exploding with growth. And Coinbase's L2, is seeing a huge surge in its DeFi activity. On March 30th, Base just hit 1 billion in daily trading volume. Look at this. This is amazing. It has also overtaken all leading L2s in terms of daily transaction count. Is Base the new Solana? You tell me. Ethereum is still looking extremely good to me, particularly when you see metrics like this. Ethereum staking rate soars past 27%. 27% of the Ethereum available supply is being staked. The signal is clear. Confidence in the long-term success of the Ethereum blockchain is sky high. In addition, Ethereum in smart contracts just blasted by 37%. Holders are locking in more Ethereum and not cashing out. At the same time, exchange reserves are plunging. Scarcity squeeze in the making. Ethereum is gearing up for an epic moonshot. Take a look at this. Just like Bitcoin, Ethereum on exchanges has never been lower. Ethereum is a deflationary asset, my friends. Bitcoin's supply flow decreases, Ethereum's supply decreases, and most people haven't realized the implications of this yet. Most people haven't realized that Ethereum is here to stay. Chainlink is the universal gas token for the digital asset ecosystem. PropiKeys, a project bringing real estate on-chain via NFT addresses and landmarks, has integrated Chainlink's automation on Base to help distribute staking rewards. Tokenization projects continue to choose Chainlink. Listen, I could play you a clip from Sergey Nazarov talking about big picture what they're doing. This would be a very exciting clip I could show you. I'm more interested in sharing with you one of Chainlink's biggest integrators and biggest partners, Swift, what they have to say. Swift, or the Society for Worldwide Interbank Financial Telecommunications, is a global messaging system that allows banks and financial institutions to send and receive encrypted information, including cross-border money transfer instructions. Swift is the largest international payments network in the world, with over 11,000 members in more than 200 countries and territories. The system daily processes almost 38 million encrypted transactions worth trillions of dollars in currency. We finally have some insight on what they're most proud of working with Chainlink, what they've accomplished. The product lead, Thomas D., reflects on how the collaboration between Swift and Chainlink helped prove that existing infrastructure can merge with the new world of blockchains. Listen to this. This is very eye-opening.
First, I'd like to say I'm quite proud of what we have achieved because, as Sergey was explaining, we sort of have bridged, I believe, a bit two worlds, the traditional world and the new one. we made it clear that you can use existing infrastructures to actually have an impact on this new technology. And that we've done by combining first existing flows. So we use something that makes sense in the current context and business way of working. We then used the Swift infrastructure to connect via Swift to the blockchain in a seamless way. So we build an abstraction layer which protects participants from the complexity of joining the blockchain, and they can talk exactly as they talk today, obviously with some tweaks here and there so that you have a purpose and you're driven by the technology a little bit, but really to a minimum extent. And then we were seamlessly connecting to CCIP, providing security and robustness in terms of executing the intent that was expressed in a Swift message on the chain. I really think this is a key building block, actually. It's something very interesting for the market to reflect on and to try to use. And we didn't only move assets on a single chain, we also executed the movement across chains with this protocol provided by Chainlink. So I'm really curious to see how this construct will be used in the future, because I believe there's a lot of potential.
Hey, LA locals, linked in the description is an Eventbrite link. Get your tickets April 11th to the roast of Altcoin Daily in Santa Monica, 6 to 10 p.m. All the details are linked below. I want to see you there. This is also like a meetup. You can come hang out with us, have a laugh. They're roasting us. It's going to be great. See you there. Is now a good time to sell your Bitcoin for Cardano? Well, is now a good time to buy Cardano in general? According to several different price metrics, technical analysis, it is. Cardano is up against major support against Bitcoin right here. Every other time this has happened, Cardano eventually bounced right back up in a big way. In addition, taking a look at moving averages, confluence on a 2-week time frame, ADA has shifted from red to vibrant green. ADA has shifted from red to vibrant green. We remember the last time that happened, mirroring the onset of the 2020 bull run. The 2-week chart is flashing strong uptrend signals accompanied by green waves. Could history be repeating for Cardano? And by all accounts, it does kind of seem like this major Bitcoin and crypto bull run that we've been witnessing for the past 3-6 months, Cardano not really as much a part of it as Cardano fans would like. In fact, Cardano still a top 10 crypto, but seemingly going to be flipped by Avalanche, Shiba Inu, Toncoin, Polkadot, or maybe even Chainlink in the time being. Unless you think TA charts like this are correct, now could be the perfect time to buy Cardano. You tell me what you think. The world is changing at an incredibly rapid pace. The Fed Chair Jerome Powell just went on record, and although he said no plans for a CBDC anytime soon, clearly they're thinking about it. Clearly there's a bigger plan. I'm going to play you 60 seconds of this clip. You tell me what you think. We have a lot more to talk about this week regarding altcoins and crypto, and a lot more to talk about this here. Make sure you subscribe. Listen to Jerome Powell give his most updated thoughts on a CBDC. Tell me what you think. Tell me if you believe him.
And it would take legislation by Congress signed by the president to give us the ability to do what we think of as a CBDC, which is really a retail CBDC with the public of it. So we're just a long, long way from that. What we are doing, and I think what every major central bank is doing, is we're trying to stay in the frontiers of what's going on in digital finance. And it has many, many different areas. You know, it has applications in wholesale finance, in the payment system. And so we to serve the public, these issues have become very front burner in the last 5 or 6 years. We need to be knowledgeable about all that. So we actually do have people trying to understand things that are, but it's wrong to say that we're working on a CBDC and then we've secretly got a lab here where we've got one and we're just going to spring it on Congress at the right moment. We don't. I haven't at all in my own mind made a decision that I think this is something the U.S. should be doing. I just think it's something we need to understand, and we do have people who are keeping up with that as part of the broader payments landscape.